There are a lot of misconceptions and misterminology about pre-approvals and pre-qualifications, to the point where most people, especially homeowners, but also realtors and loan officers, even may not even know the difference. And there's a big difference, and the differences could make it or break it when it comes to getting your offer accepted. And it really comes down to not just doing the work, but making sure that everybody understands what actually was done to get your real pre-approval. This is my first time using this StreamYard, so I'm trying to do some slideshow. So let's see if that will work. And it did not. So let me see if I can. Your pre-approval might just actually be bull. Yeah, it's totally true. So the pre-approval is only good if it's actually a pre-approval. But what is a pre-approval? What is pre-qualification? So let's go through these slides that hopefully answer all your questions. So here's very simplified mortgage process, right? So you submit the loan, you have conditional approval, which is when underwriting grabs the file, underwriting approves it. You have a conditional approval, then you have final approval, which is the last step before you go to closing. Very simplified. But at what point is the pre here? Like, where are you pre-approved? Where are you pre-qualified? What's the difference? Well, to me, pre-qualified means the work that a loan officer does to make sure the client or prospect is able to do what they want to do, or at least come close to it. They may not know if they're going to be officially approved or what little things may pop up along the way. But if they do a thorough job and they have the experience, a pre-qualified borrower is still very solid. All right. Unless the loan officer doesn't know what they're doing, they don't know guidelines, and they skipped a lot of steps, then it could still be a bad situation. All right. So here's pre-qualified. It's completed by the loan officer. It's only as good as the experience and the thoroughness of the loan officer. There are a lot of little things you could skip in a loan file that will make the loan ineligible, whether it's skipping out, employment history, not averaging out or properly counting bonus or overtime income, or maybe the client had change in job situation, going from wages to self-employed to commission only. All these little things come into play, and if you don't pick them up early in the process, you could be surprised with a declined loan when you're trying to get your keys. So that's a pre-qualification. Now, pre-approval to me and a lot of people I work with is a loan that's completed by an underwriter. If you're not an underwriter, you're not approving your loan. The lender is not going to extend hundreds of thousands of dollars to a borrower just because the loan officer said they're good to go. The underwriter is the one who's going to sign their name on everything, and they're the one putting their name on the line. So it's completed by an underwriter, and a credit approval is when they approve the income, credit, and assets of a client. Pre means it's done before contract. There's no property. You could submit the loan to the lender without a property address. You just have the rest of the file to be reviewed. And again, not final. Again, no loan is final until it hits the final stages and you're ready for closing. So here's, hopefully you can see this, but these are some actual documents received from other lenders, from borrowers. I guess the slide may not be the best for this, but you can see this is from Better Mortgage. Pretty big name. They do a lot of online stuff, and you can see here, hopefully you can see it, but this is a pre-approval. Client received it last summer, and you can see here in green, it says they reviewed credit, right? But stated income, stated assets. The lender, the loan officer didn't review income or assets. They only reviewed credit. If you look at this, they only pulled Experian, right? I'm going to go to the next slide. I think I highlighted it. Yeah. So the next slide, they only did a soft credit check. They only checked 1 out of 3 credit bureaus. They didn't look at income documents. They didn't look at assets, but they pre-approved the client. I don't know. Would that work for you? Now here's the second page of it. It says that this pre-approval shows potential sellers that you're serious about buying. I mean, all you've done is tell your loan officer how much money you think you made, and they ran 1 credit bureau, and that makes you a serious buyer. In what reality does that hold true? And it says here, how did we get this amount? Well, based on what you told us. I don't know. And I did, for privacy, the loan officer, I crossed off their information, but you can see their job title is mortgage expert. And when I checked their licensing, they've been licensed for 16 months at the time of this pre-approval. So I mean, I've been doing this for 17 years and I don't know anything. I mean, you're still learning things all the time. You're never an expert. Nobody's an expert. To have the gall to say you're an expert after 16 months when right before that you were a waitress at a restaurant. I mean, you could be very smart and intelligent and pick up a lot of things quickly, but you're not an expert. I think of one more. Okay, this one is a little better. It's from a big bank, Wells Fargo. They're great at opening up credit cards for people. And if you look at this, it says the applicant filled out an application. They've checked their credit and they've conducted an initial automated underwriting review based on the information. So they actually got information from the client. They put it together. I don't know who put it together, but they have an initial automated underwriting. And what that is that's not an underwriting. What that is that's just a system that validates the data we put in as a loan officer. So it's only as good as the data we put in. I did check, and this loan officer was licensed, or not just licensed, but working for Wells Fargo for a total of 6 months before this, not even anything close to the industry. So I don't know who put the data in, but whoever did got an initial approval. Now, I don't have the other page to this, but they did break down 3 different stages of approval. There's the pre-approval, which is what this is, which is not underwritten. And then Wells says there's a next step, which is a credit approval, which actually goes to an underwriter, which, as we discussed, to me is the pre-approval. So yeah, bottom line is your pre-approval may not be real. So here's a little bit longer, more detailed mortgage process, sort of. You can see where things come into play. This is the application stage, the very, very beginning. Pre-qual, this is when the loan officer makes sure it's a viable loan. If someone comes in to apply for mortgage and they haven't worked in 3 years and they don't have a current job or no income, I mean, you can tell right away that they're not going to get a loan. So you can kind of stop the process right there and give some advice. After the pre-qual, then you actually go to submission, right? Not until up until this stage, there's no lender involved, no underwriter. You go to submission to the underwriter. This is with or without a property, and you can get your either conditional approval or credit approval, depending on where you are. And then it's just a matter of finishing things up, getting the property, satisfying all requirements, and going to closing. So that's pretty much it, start to finish. So when you get pre-approved or pre-qualified, again, you don't need one isn't better than the other. Well, pre-approval is better. It's more thorough, but most people should be able to get their offers accepted from a seller with a pre-qualification. But as long as you know that the pre-qualification is from someone reputable and they've done their homework. I've done other videos where I talk about how to pick a loan officer, but just make sure they're asking questions, make sure they're doing a thorough job. They've asked you for a lot of documents. If you've had, hiccups and things there and they haven't addressed it and they haven't seen it, maybe that's cause for concern right there. So depending on your situation, if it's a hot market, a lot of buyers, get your pre-approval. If you're not in a rush, pre-qualification's enough. A lot of times I get pre-qualified and I can speak with the listing agent, go over the strengths of the file and show them like, hey, this is as solid as you can get. We don't need an underwriter. There's no weird hiccups with the file. It's steady employment for years, no credit issues, no debt, nothing funky at all. Hope this helps people clarify what they've been given. Any questions, please let me know. I'd be more than happy to clarify anything you've received from other people. And if you've been given a pre-approval or anything, I'll take a look at it for you and tell you how legit it is or not. All right. Take care and good luck.